Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. If you're looking for undervalued investment opportunities, click subscribe. Give me the thumbs up button if you like this content. So back in, it was January 8th, 2021 of this year, I started a hypothetical portfolio. Haven't gone over it very much recently. I'm going to go over it here. The portfolio is made up of a lot of the commodity stocks that we talk about on this channel. It's up 29%. I have not sold a single share in anything. Looks like, looking at the diversity, I'm just going to shrink them up a little bit. Looking at this diversity here, we've got 2.9% others, 43% basic materials, 51.7% energy, 0.4% industrials. And usually I go over this because people want to know what I'm buying, what I would buy, and then I throw it in this portfolio. So some of the stuff that looks pretty good right now, LAC, some of the lithium type stuff, I would say looks pretty good. So if you guys like lithium, that'd be a sector that I would look into. Some of the uranium companies are looking pretty good. It looks like it's starting to try to bottom out. And if some of them break, kind of like Uranium Royalty Corp, if it breaks its high that we went over in the technical analysis, that'd be another one that I would be looking into to add into. I did make recent purchases in Uranium Royalty Corp. EMX Royalty is one that I purchased a little bit in. Teuton Resources is another precious metals royalty company. I added a little bit in there because they were down quite a bit. And it looked like gold and silver could potentially head higher. And again, remember, I'm in these things long term. And some people, I read through the comment section, they may say something on the lines of, I'm down 10% or 16%, which really isn't that much being down because these things are pretty volatile. But if you're down and you're buying physical metals like physical platinum, I was down over 30%. I was buying in 2019 because the ratios were cheap. And then in COVID, it sold off very hard. What I did is I cost averaged in. I bought a whole bunch in early to mid 2020 when it was down for platinum. I mean, I bought a lot. And I also swapped some metals. I swapped some gold for platinum. I swapped some gold for platinum, palladium for platinum. So I swapped some of those into platinum, and I thought that was going to be the bottom. Obviously, I don't know for 100% fact, but that's when I did it. The ratios were a huge anomaly, and they dove pretty hard. And I know we were under the cost curves for platinum. Platinum's cost curves in the middle of it are about 800, and we were down in the 600. So I'm like, this has to be the bottom. So I bought a bunch at that $600-700 price range. Going through here, I do think oil and natural gas, they're in a pullback right now. I don't know if I'd be buying them this second, but they're on my radar. They've pulled back quite a bit. I like Centennial Resource Development. CDEV is the one that I like, and that's the one I'm kind of looking into. Tellurian, that's been on the channel. We like that one quite a bit. REMX is one that I like. We've had a nice, good kind of breaking out of its pattern. We had very good alignment on REMX from a big long-term perspective, from a little bit medium-term perspective, and it looked good on the short term. And whenever you have that alignment, that's when I like to go long. I presented that on the channel when I was going long on REMX. And I think we're up about little over 20% on that purchase is what I'm up. And yeah, I should say it's between 27% and 21% because that's when I started buying it. ANGPY would be one I would add into. If you guys like a diversified mining company, it also has a lot of platinum exposure. And that's Anglo American Platinum, ANGPY. PLG is another one that you might want to look into if you want a smaller developer type company. It does carry more risk, but with more risk, sometimes you get that reward when platinum goes higher. It's going to be very amplified to the price of platinum. So if platinum goes down, this thing's going to go down with it. If it goes up, it's going to go up at a good multiple of it. Nova Royalty is a good one. I like that one. And I did add into that when it was down at the $2.20 area. Yeah, 216, 220, all in there is when I was adding it. So I added into this position. You can see I added into this position 1, 2, 3, 4 times. And I would add when it gets down here in heavier quantities. So that's what I would do. We added into the royalty companies all at a pretty good time. So that was good. Obviously, the newer stuff that we added into isn't working, but we can always cost average in a little bit to reduce our cost basis. If we think the companies are good, you just cost average in a little bit and reduce your cost basis down. And that's what I do. We have a lot of really big winners down here: Crew Energy, Global Atomic, Fission, NextGen. All of our energy type companies are doing very well. I got real lucky on buying Laramide. I caught it at one of those dips. SM Energy's doing well. Norilsk Nickel, I like that one for a long-term play. NILSY. Recap's doing very well for us. That's a junior oil exploration company. They're hitting stuff. Let me see what else we've got. MCF's doing pretty good. Some of our oil and gas or precious metals are struggling, which is fine. That's probably what I would go into overall. But the overall portfolio is up 29%. Not too bad. I haven't sold a single share. I'm not trading in and out. I literally just buy it and hold on. And I would say my recent purchases of some of the stuff that I put in haven't performed as well as some of the older stuff. And that's pretty normal. What you're going to see is the further into the future you get, the more these things are going to go up. So if you're picking stuff that has a very good valuation in terms of the sector, and that sector and the money starts to rotate, the longer you're in it, the higher probability or chance that you're going to be up in your portfolio. When you go in on the short term, these things are very volatile and they bounce all over the place. There's a good probability that you can be down in your portfolio, but the longer you wait in it, the higher probability of your portfolio going up. And it could go up substantially. It depends where we are and where you purchased some of your initial holdings from a charting perspective, kind of where you're at. And it just so happens that, people do like to chase price. They may chase and get into something, and then it comes back in a consolidation period, and you could be down, a good amount of money. And it's going to happen to all of us. You're not immune to it. What I do is I cost average in. If the valuations are good, I continue to cost average in, and then I wait. I just wait. I wait for the long term. And if you play it right and you have the ratios revert back to the mean, and then also revert, to an overvalued scenario, you're going to make a ton of money. So and if you want to make a lot of money, you're going to have to be brave and try to buy a bottom. And it's very hard to do, to buy the bottom of the bottom. So it's very hard to get the entire value out of a stock, buying it at $1 and riding it up to $100, 100-fold increase. And it's possible to get that. You just have to have the courage and the training to know what's undervalued and how things are moving. So that's my take on it. If you guys have any questions, please put it in the comment section. And thank you for listening. This is Finding Value.